Hey guys, Boris from BK Forex. Welcome to our Forex Technicals for 8/29/13. Will euro dollar hold or fold? As always, trading foreign exchange on margin carries a high level risk and obviously for investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading margin and seek advice from an independent financial advisor if you have any doubts. Well, euro, I think clearly sort of the central story, even though it wasn't really a big mover today, still remains to be the central story because euro continues to be trapped in this 33.34.50 zone, or really 33.34 for the last several days. And it keeps touching 33 and bouncing back off of it, suggesting that we do have relatively decent support here at that level as buyers come in and buy it up. Tonight in economic news, we have German unemployment in front of us, and then we have US GDP into the US session. So not much of a calendar, but possibly a mild bit tone to the euro because of it. But the critical thing here is the 34 level. We've gotten rejected at this level about 3 or 4 days in a row. If we can barrel through, take it out again, and hold it, this is the critical thing. If we can just hold the 34s, that's going to, I think, create a more sustained and possible run towards the 35s. On the other hand, this 33 been bought several times in a row. If that gets given, if we sort of break 33 in a significant manner, let's say we go to 32.70 or somewhere around there, then the path towards 32s and really almost over here to a spike of 32s and possibly all the way down to 31.50s becomes a much more real possibility. And you really have essentially a distribution top at 34.50. So the euro is still in this very undecided zone technically. Very hard to really predict the directionality, but I do think that whichever way it goes, there should be some sustainability behind the move. So if we break the 34s, we should have a much stronger potential here to make 35s. If we break the 33s, it looks like we're going to have more of a correction than most of the euro bulls thought. Dollar yen kind of holding this 97 level, still very much a key support level, but I don't know if that level is a really decent base for this. I mean, yes, tomorrow we have actually US GDP. Presumably, it should be much better than expected, so it should give us even further thrust to the upside and potentially a move towards 99. Overall, basically, if you look at dollar yen, if the range in euro is 33.34.50 or 33.34, the range in yen is 97.98 or 97.99 all the way to the top side. And I think in many ways it's kind of reflecting exactly what is happening in the markets here, which is absolutely nothing. It is a pure tight range bound market in both of the key currency pairs, suggesting that traders are basically on the sidelines looking for some sustainable story to take the pair one way or the other. Until we get a resolution on one side or the other of these ranges, it's really going to be just this kind of a burn and churn market. And I think for those who are looking to trade momentum, the best thing is to sit on your hands. For those who are trading ranges, it's very much your kind of a market where you buy the bottoms and sell the tops. Cable, also a very similar story. Like cable today had a little bit of a better day. The see much better moving cable on the dailies, and you have a hammer to the upside. It basically suggests that today we had the BOE Governor Carney give a much less dovish than most people thought speech, emphasizing the fact that there may be a percolation of housing activities, that is a little bit of a housing bubble there, suggesting that maybe monetary policy is so accommodative that it's creating a little bit of a housing bubble in the UK, and admitting that the economy on a broad basis is starting to really perform well. So there was a lot of support here. We bought the 55s. It really rallied up to the highs. The next key level here is 55.50. We can take that out. It puts us right back on the path towards the 56s. Overall, this 57 still reigns as a major resistance level, but basically what you see here is the 55 is the support, 57 is resistance in a broader expansion of the same kind of ranges that we had before. And of course, the last thing that we have is the Aussie. The Aussie is just been a one-way disaster for most people. It's just been a drip lower. Basically, if you look at Aussie, every single level has been to the lower side. So even if you start out in the most recent cases, you have 93s, then you have 92s, then you have basically 91.50s. Now 90 becomes the key resistance level. And all of this against a very key bottom here of 88.50. This needs to hold, and basically, perhaps in the best case scenario for the bulls, we need to hold right here, create a higher bottom here, and then perhaps create enough of a base to re-challenge the 90s and 92s for a much more sustained move to the upside. Unless we get this kind of a path here, a break here could open us up all the way down to a move towards 85. So it's kind of how the day shapes up. Not much on the calendar tomorrow, but it's worth watching all these ranges, although they likely are going to remain stationary until probably next week when we get more liquidity into the market. But still, you need to be prepared to see the key wages go one way or the other. Wishing you guys the best of luck and the best of trading. It's Boris Losberg over now.